Okay, into day two of what we're dealing with here for the week ending of the 22nd of January 2010. All right, so we've already looked at what happened on the 18th, how we made that profit from taking the long at the support of 91.88, which was strongly supported. We had validity in doing so because we were in transition. We had the signal telling us that we're looking at some seesawing action and still seesawing again. This time LT. LT means the T means we finished at the top of the range after. Okay, and the L stands for long. It was a long day that finished at the top of the range after being at the bottom of the range the previous day. That's what this L shows up here for. Notice, like, for example, this T here. There's no L next to it or anything simply because the day before was not a bottomed range day. Okay, it just simply finished at the top. Didn't let us know any seesawing was really going to happen until here. And of course, just as with everything in the market, there's nothing that's 100%, but this is a high probability, okay, when we see this, all right? Now, let's move on and look at this day. Now, this is one signal telling us that things are going to probably either go back to the bottom or it's going to take off and bust through the previous day's high. Now, let's go back to the logic, though. First thing that we need to do is look at the closing price, 92.53 from the previous day, because we're getting ready to go into this day here. So there's the closing price. We wouldn't have any of this information at all at this point. We would only see this. We would know what the open was, but nothing else. These would all be empty cells, but that's okay because we have the closing price. And so this would give us the information on this row down here. So that's the first thing we do is look at that closing price, 92.53. Slide over and take a look at the support resistance areas. Where are we in relationship to it? Well, we're right in this previous day's three-layer resistance area. It's right there on us. Okay, we're in it, and it's holding us there. Now, that's a good signal that the LT signal that we have is going to be valid. Also, if we look over here as we start sliding over, again, we have a very small move. It slided back to the upside here in the 5-on-5. And now what this is saying is that it went from -2 to +2. This is kind of like seesawing. It's like another validation of the fact that we're seesawing, okay? And here is another indicator that shows us that we may see this thing come back, which is called the first full house. A first full house is a signal that we get in our daily bias that tells us the first time that we get all one color after being some other than that, okay? Here it happened once. Now, this is making it iffy because once you've seen one and it comes out of it and back again, it's technically still a first full house, but it's a weak one. Okay, but it's a first full house nevertheless, and it's validated by this seesawing signal that's going on here, and seesawing signals going on here, and trend transitions going on here, and then the consolidation has come back. Okay, so we still have a very valid point in dealing with it in that manner, and that is that take the short that we took the previous day and short it again from either where we were at 92.69 or 92, or at the open 92.54 even. Put our stop above the 92.87 resistance, which is showing up here, 92.85, 92.87. Also shows up in other places. Where was it that I saw it? Maybe that was, that must have been another... well, we got 92.74, and then of course we have the high for the previous day, 92.78. Now, if it breaks past that, then it's probably going to bust loose. But as you can see, it didn't. It made it to 92.73, fell to 91.76, which would have filled the target of 91.88. Okay, and then it came back a little bit to 92.37. Now, we would not have necessarily looked for taking a long position again at the 91.86 at the bottom of this consolidation, simply because of the negative bearishness that we're seeing take place. Okay, this is trying to fall. Notice the numbers are getting weaker and weaker, and then they start seesawing. Many times we can expect to see things change after this long transitional move that's been taking place. So we don't want to take that chance. Let's just take our money and go home. Of course, we could have tried it and we would have gotten a few extra pips. However, we could have also lost it. So it's better to take your money and go home. So that's the way we logically deal with the QuickView on the next day. And as you can see from looking at the chart from previously, this is the day, the first day, the Monday, how we took the long, went to the top, took the short. Notice how it remained there for quite some time, for many hours, collecting, okay? And people were selling off and so forth until finally it fell down, came back up at the support, which we knew was there, but we didn't know if it would break that support, so we didn't take the chance, which was at the 91.88 where we took our profit. Okay, I hope this helps. As you keep watching this day by day, it will pick up on the logic. We want you to learn the logical thinking by using QuickView. By looking at areas of support and resistance, you want them to match other areas of support and resistance, and you want to calculate or keep score of the longs versus the shorts and see which direction you want to take, or whether or not you want to play both sides, as we did in these last 2 days. Okay, let's move on to the next day.